How to use trend lines for predicting price behavior. In this lesson, you'll learn how to open an order in the most profitable way, what a trend line is, and how to draw it. Technical analysis. Technical analysis is the analysis of a chart. The trader examines past price behavior to predict its movement in the future. Trend is the primary direction of a variable price movement. A flat trend is a horizontal price movement without significant change in a value up or down. A bullish trend is an upward price movement. A bearish trend is a downward price movement. The price never moves just up or down. Even if it moves one way for a long time, minor rebounds can still occur. This makes the chart look like stairs. The trend only determines the dominant direction of price movement. Within this trend, the price can still move in the opposite direction. The trend line helps traders to find the best spots for entering the market. Buy orders for an uptrend, and sell orders for a downward trend. How to draw trend lines. Trend lines help to determine the trend. If the price grows, this is an upward trend. In this case, you need to draw the trend line using the lower point of the chart. The resulting line is called a support line. If the price goes down, this is a downward trend. In this case, you need to draw the trend line using the upper points of the chart. The resulting line is called a resistance line. Let's draw a support line for an upward chart. Firstly, we connect the two steps closest to the current price. The chart can touch the trend line or go slightly beyond it. More lower points on the chart will touch the trend line, the better you determine it. You can adjust the trend line later on if needed. For less than a 1 hour scale interval, draw the support line touching the bodies of candlesticks. For a 1 hour to 1 day scale interval, draw the resistance line touching the bodies or the shadows of candlesticks. It's your choice. For over a 1 day scale interval, draw the support line touching the shadows of the candlesticks. There are exceptions. For instance, you can ignore one shadow or one body of candlestick if it crosses your line. Let's summarize what we've learned from this lesson. Traders analyze past price behavior to predict movements in the future. If the trend moves upwards, the trend line you draw should touch the chart's lower points. Such line is called a support line. If the trend moves downwards, the trend line you draw should touch the chart's higher points. Such line is called a resistance line.